Yo, what's up YouTube? Today I want to do a little bit of a different video where I'm just showing something that I use a lot in my trading, which is one of the main ingredients that make me profitable. If you like this sort of content, leaving a like, leaving a comment, leaving a sub is very much appreciated. It's just going to be raw, me talking and going through the charts, and hopefully there's some useful stuff for you guys in there. Um, so I want to talk about areas of interest. I have a lot of people that I talk to trade with fair value gaps or supply and demand zones, but a lot of times I hear ICT traders, or at least, I don't know, like the fair value gap traders. I think it's like part of the ICT, but I'm not sure. I hope it works for you, but I just found my way of trading personally to be a little bit more simpler, easier to understand. It's subjective, of course, so don't feel sort of like I'm pointing fingers that whatever thing is not good. It's just what I think for myself and maybe for others, and yeah, that's just basically it. So areas of interest. I find an area of interest the most strong the higher the time frames, but recently I've also used them on the lower time frames just because I've realized they work on the lower time frames as well. But just a simple thing, higher time frame, the better the area of interest, and the more touches it has, the stronger the area. So right here, I'm just on the 1 hour time frame for this example. This is an area that I drew up. You see one rejection. Basically, it means touches is basically like I want a strong rejection from the area, either as like acted as support whenever it's above it, so it bounces off, or whenever it's under it, acted as resistance, right? So that's what I find a touch. So here we have one touch where it bounced off, another touch where it bounced off, so 2 times acted as support, another time it rejected, but then it fell right through, pushed through, so I don't really count this, but you did see it struggling around this area, and then as soon as it sort of broke under here, it retested it, as you can see, sort of it retested this area, and after that it went down like massively, like really big, right? um and same here, like it went all the way down here, worked its way up, and then as soon as it reached it, it sort of rejected and went all the way down. um as you can see, multiple touches here where it's like whenever it's under, it's just struggling a lot to go over it, right? Whenever it's under, a lot of struggle, and as soon as it broke above, it pushed up like a lot, right? It just moved up a lot. And let's see if I can show it like on the 15-minute time frame, if we can like see if we can get some entries from it, right? Where is it? 15-minute time frame is like all right. So let's see, I've identified this area, right, as like a potential area. You could wait for like engulfing candlesticks after it reaching the area, for instance, like this one. Place your stop loss under and go for like a trade like this, right? Just base of the area. You will almost get like a 2x on this one. You get it, yeah, you can get a 2x, but you have to wait a little bit longer. But the stop loss is pretty tight. Um, let's see if we can. Well, it's with hindsight, of course, but I just want to show sort of the strength of the area, right? So here you notice the structure in combination with market structure. Here you see sort of the structure, and in combination with the 50 EMA, highly recommend the 50 EMA as well. And it's going down of the area. But as soon as you see this happening, like clearly one doji, another rejection, on that area, on the 50 EMA, this would be like a beautiful trade for me. And I could just enter of this doji, or even after like sort of the first engulfing, you have like a doji candlestick. After that, an engulfing candlestick that engulfs the doji. You could just enter from here with like not too tight, but most of the time I do a little bit, give it a little bit room, maybe this. And yeah, you have such a big trade on your hands. Like this trade, if you would have held it, it's like crazy. This is why I often have like 10x trades or like 8 risk to reward ratio. This would have been a 16 risk to reward ratio if you would have held it. Let's be real, most of the time, or like 90+% of the time, you won't hold this trade until it's like at the perfect take profit, right? But what you could have done is follow structure, and as soon as it went bullish, so you might have exited here because yeah, it's looking like it might retrace. But personally, I would, in a situation like this, I would look at like sort of, oh, this structure. I would place my sort of lower my stop loss to here, lower my stop loss to here after it reached it under, and then you could just continue with the trend. But just an example of you can have like massive winning trades of this. Basically just on the area, you could even give it a little bit more room. 50 EMA in combination with an area of interest. Then here, right, same area, just the same area. So what you can do here is put like an alarm. As soon as it's under, set an alarm on the area, just chill. If it reaches the area and you see a rejection, this is a massive rejection candlestick. Again, you can just enter of that and place your stop loss above and go for like whatever, 2x, 3x, whatever. This is a 3x, so an easy 3x potentially on this trade after it just rejecting from the area. Here you see that I actually did enter the trade and it failed. But that's the beauty of having a positive risk reward ratio. I can lose one, win this one, right? Like get a 3x or 2x, and I can easily lose 1 or 2 trades even, right? So here I entered early, so that's bad. Here I did make profit, as you can see. Here I did basically just the same thing. It reached the area again, entered, and had a nice little profit where I exited here. Here I think I lost. Here I probably, I'm not sure if it's pushed me out here. Here again on this area, it had a nice rejection from it. You could just go like this. It's a pretty big stop loss at this point, but you could have sort of done it like this. But even if you place it under, it's still a nice little 2x. So it doesn't work all the time, but as you can see, like a lot of times it does work and you are profitable. You can be really profitable with it. It's the way I trade. One thing that I want to do, I'm already at 8 minutes. I'm not sure if I have time. I just wanted to see if I can sort of go back and see if I can sort of, well, I've drawn up a lot of areas already. So that's not really a good thing I can do. Like on the, this for instance is also a nice area, right? You see multiple touches on this area on the 4 hour, like here, multiple again. So here you could have entered here again. I know it's hindsight, right? Like I'm not stupid, but just to sort of show you how strong areas of interest are and how easy they are to trade with. Just go for like find a nice area, respect it on the higher time frames, at least like the 1 hour, but like most likely even bigger, 4 hour, the daily and the weekly, etc., depending on what time frame you want to enter, and then go from there. Like here again, you see it doing the exact same thing as I talked about before, basically pushing under the structure, retesting it, and then the massive fall down. Basically the same thing that I talked about on the trade like 1 minute ago, on the other, or 2 minutes ago. Massive trade on your hands. So yeah, this is a little bit of a different sort of YouTube video I want to make, but yeah, I don't know. Maybe people like this sort of content where I just talk you through the things that I see. It's a little bit limited because it's only like 10 minutes. But yeah, if you like this sort of content, leaving a like, leaving a sub, leaving a comment is very much appreciated. And yeah, join the Discord if you're if you want to get in touch. I also want to do some free coaching, so if you're interested in that, let me know. And yeah, I hope you guys have a lovely trading week. See ya. Bye bye.